think that's going live. Let's see. Zoom anyway. Let's see. Let's see. Is this live? All right, cool. We are live. Good morning. Good morning. Let's take a look at this. Let's get the disclaimer up before we do anything. Okay, welcome everybody to the call. This is streaming live on YouTube as well. A disclaimer before we go any further. This is just my own personal views on what I see for trading gold. I do this every day. This is not financial advice. This is not a guarantee. My past results are definitely not a guarantee for the future, and you are in control of any trade you take. You know, trading is risky. You can lose all of your money. So please understand that. It's very important that you do. But I just stream live so that you guys can see what I'm looking at personally for the trades that I like to take. Okay. Doesn't mean I'm right, but it definitely is the way that I like to trade myself. Let's get the chart up so you can see. So James, just a quick one regarding your what you just mentioned. You can see my screen, yeah?
Yeah, mate.
Perfect. Okay, cool. So regarding what you just mentioned there, trading stop loss, was it a sell or a buy?
I'll tell you exactly what it was. It was a sell at 4256 with stop loss at the high, so 4260, and then it went up to around about
4256, so roughly around here.
Yes, and it wicked out at 4260 because that's where I had my stop loss. But it moved to break even, and I should have moved my stop loss to break even, but didn't. And then it came back up when New York opened and flew down, but I'd already been stopped out.
Okay, so you got in up here somewhere, yeah, and then you got
Correct.
stopped. You got stopped out. Where was the stop loss at 60? Yeah.
4260, yeah.
Okay, and what was the target TP?
TP was 4238.
Let's turn off a load of this stuff. There you go. 4238. Yeah.
Correct. Yeah.
So let's say it's roughly here. So here's the interesting part. You actually had enough margin to be able to go 2-1. See it?
Yeah.
Can you see that? Right.
I can, yeah. Yeah.
So if you'd have actually set that as a 2-1, if that was your trade, you would have had a winning trade there, mate. Yeah. Instead, you set it at 2.7 to 1. I don't know if that's the way that you trade or what you're looking for, but because you're doing this all on spreadsheets and stats, that's what I think is really important for you to pay attention to. So I think that's going to really help you in the future.
Yeah, it was 2.5 to 1. And my rationale for it being there instead at 4260 instead of 4265 was because of where the previous high was. So I just thought if New York opened and then broke that high, it might continue up.
Yeah, for sure. And then you've also got where it came up and took out London high. So if you're rolling in that trade and you see it breaking out above, you can cut it short early. Once you see it break back below these areas, you know it's going to continue to the downside.
Yeah.
Great for learning. Really good for learning. You know. So really nice trade as well. What made you take the trade there?
I was looking at the wicks on the bigger time frames for moving back down to Asia low, and there was one that caught my eye where I saw we hadn't taken it in the morning. So I thought maybe for New York Open we'd come down and take it, which obviously we ended up doing. But yeah, you live and you learn. I've noted it down in my journal.
Yeah, yesterday was a really good day for learning for people. To give you an example, we were on the chart roughly around, where were we? Let's get in on this. So we were roughly on the chart around here, trying to figure out what was going on. We were looking for the buy, which is around a 60 pip buy to the upside. Yeah. If we go to let's take a look at this on the 30-minute as an example now. All right. So if we go to this on the 30, look what happened. And I'm going to turn on the Asian high, Asian low. So you can watch how this plays out. So we didn't go up to Asian high. London session then opened. We hit our area, okay? And we were looking at price still trying to break to the upside. We have this, let me get rid of these trend lines here. Perfect, cool. And this, I'm gonna keep this one here like this, all right? Now, we have this candle here, the 30-minute candle created a bear candle with the wick to the downside. So it's still trying to stay down. Once you see it break that area with no top wick, see this? Sorry, no bottom wick really. So it should have just come back down, instead shot up and took out liquidity. Once it now breaks below this area, you now know it's probably going to fall the distance from the yellow to the yellow. So we took out the Asian high, which is here. Let's make that now dotted. And we took out the New York high and we came up to both of these areas. So we use this one and we use this one, and basically to the wick, that one reversed at that area, which is a great sell zone. Now we watch and see what happens. Okay, price is still bullish. And then you see we try and break. Once we break this wick now, you know that we're more than likely going to fall to the downside. All right, so it's not ready yet, not ready yet, not ready yet. And then you've got that move. See it? So the push up and then a push down. Now this is coming into New York Open, okay? Now we're coming into New York Open. Let me just check what's going on here on mine. Yeah, now we're coming into New York Open. Now we can start to see a little bit more of a change of what's going on. So let's watch again. So now this is New York is open. You see, instead of continuing to the downside, we now push back up to take out what we're going to take out, London high. So watch what we do. We take out London high. Boom. Now, once we've taken out London high, we reverse. We say, thanks. I left my kids there earlier. I'm going to pick them up. Now we're going to go on our destination where we said we were going to go. Now we start our descent to the downside. So we come into our areas. We break through the yellow, which you can see clearly here. So I'm going to delete all of these as we go through them. All right. So we broke the yellows, which are here and here. We've broken close below this zone, but look where we rejected the first time here. Bang, straight back up. Yeah. So I'm going to get rid of all of these as we go along. Came into this zone. This was a horrible move, absolutely disgusting move. But the reason why I've kept the trend line, look where it rejected. Yeah, you see I wanted to keep the trend line, this one down here, because you normally find that if you keep these trend lines, they end up being a support, which originally was resistance. So if I do something like this, you'll probably see again as we go along. Let's see. So there you go, come back down. Now we're taking it out. Now we're trying to hit Asian low, but for some reason it didn't want to do it. Yeah, for some reason it didn't. And then we come into the back end of the day, which is around here. Okay, now we've got New York low. So let's map these out. All right, so we've got a New York low here, which is, we'll do that in red. Cool. And we've got the Asian low, which is here, which we're now going to make dotted. Dotted means it's not today, it was yesterday. All right, so let's take a look. You've got a nice trend line being created here, from here to here. And you've got this one over here on the way down. So now let's watch, see what happens. Once we see an engulfing break, these lows attack this wick and then attack the downside. This is now coming to the end of the daily session. All right, so the day finished. Now we've opened, we start pushing down, pull back up. And now you can see we're respecting this trend line, which wherever you want to put it from, it's respecting this. Okay, so this is why trend lines are so key for trading. They can make such a big difference for you if you know what you're looking for and how to look for them. So now if we watch this, let's see what happens. Where are we going? Now we're starting to come down to the New York low. Try and attack that New York low, and there you go. Wow, look at that. That was just crazy. 2 a.m. in the morning, came straight to our demand zone, broke below it. This is where you can take a buy, but you want to be careful how you take the buy there. You're better off looking on the 1 minute down at that zone and wait for your TK lines to switch. So if we go to the 1 minute here, I'll show you how. And we take a look. We've come all the way down. If you just hit buy there, it's a gamble. But once you see we bounce and bounce and bounce and bounce and we come above, once we come back down and then break this high, you can continue the move back up if it does that. So let's watch. Yes, come back down. and then break the high. And that's where you can try and catch the buys back up. But you see right now, if you watch the price, what it's doing, it's just purely, totally and utterly consolidating there. Okay. Now you've got this wick to the downside. We've got an Asian high being created. So let's map these out. What time of day is this? This is coming closer to where we are now. So that's Asian high today. There. And there is Asian low. I'm going to get rid of this one now because it's not valid for me. Once we break this green area, we are predominantly looking for price just to fall. So now let's take a look. Let's get rid of that. Again, you can see our lovely channel that's been created here. So we're going to more than likely bounce in between that. And that is essentially your downtrend. Can you see it? Yeah. So again, we can get our trend line here. And we can start to identify a bit of an uptrend being created here. So let's watch this play us out. See what happens, respects it, breaks it. Does it engulf back down? There you go. There's your move back down. There's your trend line again. And now we are essentially, until we break, we can turn these areas off now. So let's delete some of these. 1 and 2 and 3, 4. Cool. We've got this zone. Yep. So we can delete this one. We have respected this one at the top. And we can do this. Okay, great. So we've got a New York high at the top here. Dotted, red, done. Cool. This is starting to fall now as we speak, which is nice. So I'm just looking at my MetaTrader at the same time to see what I can see. Bear with me, guys, because I've been in sales today. Slightly aggressive, but valid. I'm just going to move my TPs. Certain areas here. Perfect. Okay, cool. All right, cool. Where were we? So we've got liquidity areas here, here, here. Great. Okay, we can turn off the Asian high and we can turn off the Ichimoku cloud. We are looking at predominantly this coming down right now. You can see that it's actually drawn out pretty nicely. Does anybody have any questions on everything I just mentioned on so far on these drawings? James, oh, sorry, mate. So basically what you want to do when you're trailing stop, what's worked well for me has been looking for highs and lows on the 1 minute to the 5 minute for areas to be able to put my trailing stop loss. That's what I like to do. Yeah. And so as an example, if I'm looking at sales coming down anywhere at this point that we're looking at now, then there was the last high, there was the last low, there was the last high, there was the last, I'll call that the low, there was the last high. So I would start trailing my stop loss in increments at these areas here. Yeah. Again, there's your last low. So now if you look at that on the 50-50 rule, well, from this high to this low, where's 50%? And now look at where we're rejecting from, coming back down 50% as well. So as you start to see these trend lines, so we're just going to wait and see if we are looking for buys. We haven't done the analysis yet, but if we are looking for buys, then we're just going to wait and see when we break these trend lines that are being created right now. Okay. So how do I do that? James, does that help?
Yeah, mate. And in terms of when you're in it at the start, because I think I probably went into the sell early too. I think there's a part of like just timing yesterday. You're better off just getting you're better off moving stop loss to break even, aren't you? And letting it stop and then consider re-entering rather than because it did float in.
It really comes down to like a lot of people are very systematic with their trading and some people are very sporadic. I'm not as systematic as yourself with your spreadsheets and everything. However, systematically, I believe is a better way because it can help you remove the emotions, right? And so if that's the case, then you just want to program that into your system. If you're going to put your stop loss at break even after 20 pips, well, that now means, well, I said I was going to have 3 trades. Do I count that as a loss if it's break even, or do I count that as I still have 3? So you just need to start figuring that part out as you go through it. And then once you've figured it out, you're really good to go. Yeah.
Yeah.
Yeah. All right. But again, it's all trial and error, mate. It really is. The hardest part is the emotional roller coaster that you go on. You know, once you can overcome that, and that is by systemizing everything, then you're probably going to be in a much better place.
Yeah, I mean, I did the journaling, and if I keep moving stop loss to break even and set that as a rule, regardless of how much I could have potentially won on other trades, I'd have removed like 3 of the losses that I had over the past week.
There you go.
I think, yeah, just looking at the data, I'm probably better off just having that as a rule.
Yeah, correct. You know, it takes a bit of time, but it's good because you can always message in the group chats as well and ask the questions there too. So let's take a look. Does anybody else have any other questions before I move on to this? Renee, good to see you, my done. No other questions? Okay, right.
So, can I just chime in with the moving the stop loss to James?
Yes, go for it.
What has helped me with my wins, James, is that so for me, I am looking for 60 pips for my trade. So I set an alert when it hits 40 pips. And when it hits 40 pips, then I move my stop loss to break even. And 9 times out of 10, that has come through. So, that might be something for you to think about. I don't know how many pips you're looking to take per day, but maybe when it hits like a certain area, then set an alarm and then move your stop loss to break even. That's helped me in the past.
Yeah, I like that, mate. I'll think about that because it gives you a bit of a buffer, doesn't it?
Yeah, correct.
Thanks, man.
Okay, right. Let's get the TK lines set up. Okay, right. So let's go through the weekly and then go through to the daily. So on the daily, we are seeing, I can see my TK indicators are much further down. I think I've already got that green zone. Yeah, I have. Okay, cool. So that's the area. You can see we're respecting the trend line at the moment. We've already hit the area at the top of the supply zones that were created yesterday. Now, on the daily, we need to map out this area, which is essentially the high of the day, which has been created already. So I'm going to make that yellow, knowing that if we break above that area and I'm on lower time frames, that's my alert to say, if I'm looking for sales, get the heck out of there, right? I'm then changing my bias, looking predominantly for buys to the upside. Short term right now, it's looking more favorable for sales short term, but long term, if this daily is going to be interesting if it closes. So we're either going to close as a bear candle and then attack this area, which then aligns nicely with all the liquidity down the bottom to then see that move. Or this candle is going to flip to the upside and continue up. So if it closes similar to where it is now, then we're probably going to find the next daily coming down. That would mean by Wednesday, we have a bear week so far. And then if we see some news, which when is NFP? During the week, this week, I believe, then if that is good for gold and bad for dollar, then we may well see the move to the upside. So that could be the play. Short term like this, long term like that for later on in the week. Now I'm going to go to the TK lines, the first things that tell me that there is a high possibility that we're going to come down. Let's go to the 12-hour. Take a look at the 12. Okay, 12-hour candle doesn't look like it has any interesting going up as we speak. It's got 2 hours left, and we have the TK lines nearly split down below here. So everything's pointing to the downside, providing it closes a bear candle, but there's 2 hours left of that. 8-hour candle, we are attacking the wick to the downside. We've taken out over 3/4 of it. Can we continue down, or does the 8-hour want to flip? So I'm going to put a line here for the high of the 8-hour because there's 6 hours left of that candle. So if in the next 2 hours it flips to the upside, we're more than likely going to continue going up. Okay, and that's when my bias will start to change once we start to break those yellows. Until then, no. 4-hour. Okay, 4-hour. I can't draw anything yet on the 4 hour other than a downtrend. The 4 hour actually is a really nice downtrend. Let's put something like so. Let's do it from around here, I guess. And here. I'm just going to actually, I'm going to get rid of that. It's just in the way. Okay, 4 hour. Again, we've got 2 hours left of the 4 hour candle. So I don't know what the 4 hours is going to do yet. But as you can see right now, we have broken below the low of the previous 4. And it looks like we're attacking the wick to the downside. So Asian low is looking like it's inbound. Asian low is looking like it's inbound, which is a good sign. In terms of anything else, we are respecting the first dark green trend line that was created here. Let me just take a look at this. There we go. Perfect. Cool. Great. That's that done. Yes. So let's take a look at that. TK lines, we are in between them. So it's a tricky situation to try and find a trade. 3 hour, only sells. 3 hour, we have basically, this is a really nice move. We have started our descent to the downside. This candle here created that lovely wick to the downside, took out some whatever it did. Next one tried to push up and break the high, tried to push down, and then buyers came in. Next one pushed up and then flipped. We are only really looking for sells, and the target is Asian low. If I can find a RAM candle, a demand candle below, then that might be TP1, but otherwise Asian low, and then we're identifying this area here. That's how it looks purely on the 3 hour, and the 3 hour has 2 hours left. So I am only looking for sells currently right now. If we just turn off everything except for the TK lines, they will help tell us, are they above price? Nearly. Go to the 1 hour. Yes. So essentially, this is going to be a very textbook trade. Next 2 hour candle, pushing up into these zones and then attacking this area here. Now, if the next 2 hour candle decides to open by pushing down first and then come back up, then I'll have to wait for that type of trade. But that's essentially what we're looking at here, a very textbook downtrend trade. This could be a really simple trade, but always be prepared. And let's go to the 1 hour. Are we above or below TK lines? Well below. See that? So we are now attacking this wick to the downside. We've got 6 minutes left. I 100% would wait before entering now. You never want to enter with 5 minutes left of a candle, like a 1 hour candle or a 2 hour candle, because if it doesn't really have much of a bottom wick, it's probably going to have a pullback for the last 5 minutes to create a bottom wick or a top wick if there isn't one already. Yeah. So that's why it's very important to wait for those types of areas. Right. I'm going to map out a couple of things I've just missed. So let me just go back. 4 hour, no. 3 hour, no, nothing. 2 hour. Great. Okay. So this is the zone that we don't want to break back above. Okay. That's the sell zone. Whether it touches that or not, I don't know. But once it breaks this low, if it pushes up first and then breaks the low, we'll try and identify this on the lower time frame. We've got 5 minutes. Let's go to the 1 hour. Great. Okay, so we have a round candle here, and we have another one all the way up here. Both of these have not been touched yet. So they're TPs on the way back up. On the way down, there's nothing else to see other than this area. Let me do this. Any questions? Feel free to ask. Look at that. Right below liquidity. That is a major, major buy zone there for me, this green, right underneath where the New York low is. 45 minute, let's take a look. Great. So we've got another RAM candle here, which has not been retested. So once we see price engulf above all of these, we know there's a higher probability we're going to continue to the upside. We've got another RAM candle here. So if you're expecting it to hit New York low, which is here, and it stops at this point, you'll know why. I'm not going to map out this one. It's too big on the left. Let's go to the 30 minute. Okay, it's getting very messy here on my chart, so I'm very cautious. Makes sense to me, but probably not to you. So I don't want to confuse you too much. 20 minute. Okay. Nothing else to see here on the 20. Cool. 15. We're below TK lines on the 15. Nothing to see on the left. 10-minute. Okay. Ram candle right there. So let's do this. Let's make that a darker color. Okay, cool. I think we're done. Let's keep an eye on this on the lower time frames. So I'm going to delete some of these because we know that this is the trend. This one I'm going to keep. All right, so all I'm looking at on the lower time frames are the trend lines. Okay, so I'm predominantly looking for a sell. Yeah. Where, I'm not too sure yet, but I'm going to try and identify that now so that I can get a better understanding as to what I'm looking for. I'm going to delete this and try and identify something a bit clearer on the 1 hour, so on the lower time frame. So 4, 30, 20, 15, 10, 5. How long we got left? Plenty of time. Okay, 2 minutes. 1 minute. Okay, I'm going to get rid of these because they're in the way. And I don't want to confuse you there. That is the area. Okay, how does that look on the 2 hour? Let me just see. Perfect. All right. Zone. All right, I've got it mapped out. Let's go. Yeah, cool. So I am predominantly waiting for price to push up. I don't know how far up it's going to push here, but I'm looking for price to push up. And then I want to really see a bit more of a trend line be created to the upside, come into these zones, and then try and identify a move to the downside like so. Okay. It's not as clear for me right now. Let's turn off a load of this stuff. Yeah, it's not as clear for me right now how this trade should be played. Nowhere near as clear for me right now. So I am going to wait and see. Great. Okay, cool. All right, so candlestick closed here. So that's my close. I need this to push up. Yeah, 1 hour is telling me that this is going to go up first. If we look at the wick to the upside, if we turn this off, there you go. So I'm predominantly waiting for this to push up. And then I'd like to see the 1 hour flip to the downside. And that would probably be my trigger to look for the sell, knowing where my stop loss would be. This is purely predominantly based off of the 2 hour candle and the fact that we're at the higher part of a mini downtrend on the lower time frames. And we are looking to try and attack these wicks to the downside. That's the play. So essentially, I need price to paint a picture for me so that I can identify where. Okay, so if I zoom in, I'm going to leave it like this now, and we're going to see how this plays out. For many of my trades, this isn't as clear right now for me, the direction or when to enter. So I'm going to keep a close eye on this and see what we can see. But I've got two main areas. If we go to the 2 hour, look at where the red zones are on that candle. If we look at the white candle right here, we've got 1, 2, and 3 main areas here. Now, I don't expect it to come all the way up to the blue line. I'm more inclined to think it's going to come up to this red zone, and then we get a flip to the downside. So one of my triggers to figure out where that's going to reject from is when I can see one of our structured candles that we call a ram candle has been created, which it has here. So that essentially is now my mini demand zone for a push or support to push to the upside still. Once I see that I get an engulfing break below that, that's going to be my trigger to confirm that I know what I'm looking for. As it stands, if I look at any time frame, 3 minute as an example, high, low, lower, high, and now we've got this being created here. So we're either going to shoot that way or that way, yeah? And that will then help me understand. It's only the 3 minute, so I'm not expecting anything crazy to happen. But if we look at the 5, it's painting the picture a little bit better for me. Again, on the 5 minute, we've got another ram candle created here for those of you that understand the ram. So a push up first is definitely more favorable short term to come up to this area here. And then I'm going to see if we can get a engulf from rejection back down. And that's where I look to enter a potential sell. Any questions so far? It's not as obvious for me right now. Yes, sells, but I don't know where from. And with the 1 hour candle to the upside, I'm still expecting this to push up still. So I'm not interested. If it breaks the low, I'm still not interested in taking anything myself. I am expecting this to still push back up, which is why I'm going to keep it on the 5 minute and see if we do get a bit of an engulfing push up. Any questions so far? Shreyas, did you hold the sells yesterday? Okay. No trades yet. 2 stop loss and 1 was in profit. Nice. Nice. So we look at this on the 30 minute. A safer sell or looking for sells is predominantly when it breaks the support down the bottom here. Yeah, buys to the upside are a little bit more tricky. You've got this area from this high up to this high here, which is only around 50, 60 pips. Still viable, but just not when you don't. What is this? Why is this? There you go. So we're just going to wait and see. Ideally, I'd like for this to push up the red zone and then start to see us break below this green area. Once we break below, then I'll be looking predominantly for the move to the downside. Anyone in a trade?
Still waiting at the minute.
Are you seeing the sell or buy? What are you looking for?
Waiting for a sell. Same as you though, it's where.
Yeah. Yeah, I'm just
Don't want to get it too early and watch it go up.
Yeah, I'm just a bit cautious of the I need to see some sort of trigger candle. It might be here now actually. So as an example there, and then stop losses at the high here. That's the play. Now where TP will be, then I think this is going to be a move that if can be held, we're looking at the Asian low. There you go. That's the play. If it comes back up, so this will be around a 30 pip stop, right? If it comes back up and stops out, let it hit this area, and wherever, this is what I do. Let's say it comes to here, pulls back up and comes to this area here. Now, once I see it re-break this area, I re-enter again. That's the move. But otherwise, you've seen the play. That's the sell. There you go. And that is the move. Happened faster than I thought, which means the quicker it goes down, the faster it can come back up as well. So that's 20 pips. So essentially, I've already completed my trades for the day, guys. So I'm not taking this, just to make it clear, purely because I've taken mine. So I would be looking at trailing, well, for this one, once we get to around the green line, that'll be over 30, and we're looking at, yeah, that's 20 pips there. Green line is around 30. The low over here is around 80, 75 pips. More than enough to feed. More than enough. We're attacking the wick to the downside, so it's looking good. That is the play. Play of the day. 2 minute, 3 minute, 1. So it really depends on how you do it yourself, you know. Nice. There you go. That's around 30 pips there. So again, I think safe to kind of at least maybe above the green. Job done. That's the move. I don't think I saw anything else to the left. Me personally, 30, 40 pips is more than enough to feed, you know, so I would more than likely be out there. I don't try and hold these much longer. I mean, yeah, for sure. That's there's your spike back up, respecting the trend line. Yes, that was 35 pips done. This is why, like, these moves fast down, normally you find fast rejection back up. Now, if for whatever reason you get stopped out or you don't even make profit there, which is crazy to think, then you now have this as your marker here. Okay. If you have that as your marker of the low, once it comes back down there, there's an even higher probability that it's gonna drop. Doesn't mean it will, but there's a higher probability. We have a 10-minute candle. So is a 10-minute a bull candle or a bear candle? Let's see. Perfect. It is a bear candle. So I'm gonna map this now as this zone. Okay. And then we've got a really nice area for our first confirmation for a reversal potentially happening is once it breaks that red zone there. Okay. So once we see a break above that area, then there is a high possibility that you're going to find that, and then maybe even higher, maybe. Okay. But 10 minutes looking still okay for the downtrend. Look at on the 15. 5 minutes still looking good. So if you are thinking this is going down to Asian low, then your stop loss, you really want to be a bit smarter. It's a 6-to-1 still above this area. So that would be the stop there. If you're looking for that to be a Asian low trade, which I think is very possible, then you're looking at 170 pip move to the downside. That's the trade. If we then start to break back above these areas for whatever reason, and we see something like this and this, then we're probably going to start to see this type of move, yeah, where it will respect these and then come back down and break like this. Yeah, but otherwise it's still very nice to the downside. No other news today either. That's 11 minutes. It's quite fast movement. So anybody catch any trades? Any questions before? There's nothing else I really want to identify right now. On the when you zoom out and you look, you can see the green zones down the bottom. I believe we are going to be trying to attack. When? I have no idea. No idea. But as it stands right now, providing we respect this kind of mini trend line to the downside and we break the low, then Asian low is inbound. Otherwise, we sit and wait. Any other trade ideas I see, I'll post them in the members group. Links to become members and stuff are in the YouTube chat. But otherwise, we're doing these live calls every day, regardless whether you're a member or not. I think it's a nice little vibe that we've got going on. Cool. Let's see. Let's wait a little bit longer. Let's turn this off. So 1 minute we're above TK lines, 2 minute, 3 minute. Yeah, I'm still bearish on this for the morning session until I see some drastic movement to the upside. This is just little pullbacks ready for a continuation to the downside. If I see a candle like this, look at the 30-minute. If I see a candle like this engulf and break some of these areas, then I'll start to get an idea. But that would then mean we've got to break these zones, actually, which it's trying to do. So let's see. Ooh, okay. I wouldn't try and now take buys and sells if you get it wrong at this one. I think it's time to step away and watch and see what the market does. But this is a good example to share with you why, number one, have your stop loss in these key areas, or even, like I said, the break-even move. Let's move that out of the way. You've got your zone here, which we broke below. Now we broke back above. And then you've got your next area and the yellow, which is the flip to the upside. So it might be changing to a more short-term, on the lower time frame, should I say, bullish move. But if it breaks this low, which is 4207.2, then we're looking for sells. Other than that, it's a little bit choppy. So you're better off not taking a trade. Again, if you look at the 1 hour, it's buys now. See how we said with the 1 hour, taking out the wick to the upside? Now it's buys. Do we have confirmation for buys? 100% we do. We just drew them all out. So we've broken the red. We've got this area here. Now you have, and this is how, if you're a scalper, you can scalp these moves. This is a 30 pip scalp to the upside now. So if you're not comfortable trading that way, and well, at first it was sells, now it's buys, that's scalping. Yeah. If you're looking for the bigger move, then you would more likely be in a sell now with a 100 pip stop loss and a 60 to 80 pip stop loss and a 100 to 70, 180 pip TP, you know, which is what the sell was. But if you're looking for the buys, then you're looking at it in a different, you should be looking at it in a different way. Yes, the sell in the sell. Okay, cool. Junior, you get stopped out, or did you take a different sell?
I got stopped out.
Yeah. So I always say to everybody in the group, 20 pips, 30 pips for sure. Me personally, stop loss. To be honest with you, I don't even put stop loss at break even. I take my profits off the table. I'm just looking at my trade history right now. And I mean, I had a sell here, 42.15.2, closed it at 42.13.8. What's that? 25 pips. Yeah. So it's kind of like, that's all I do. I look for the get in and get out and be done for the day. I'm on my, on the tag account, the 12x leverage account, we're done. Like, I don't want to look at it anymore. And Junior, have you got more ammo to take another trade, or is that you done for the day?
Yeah, that is me done for the day.
Yeah. What did you learn from it?
What I learned was, I think for me, just to be a bit more patient after London session opens.
Well, a question for you on this, right? So tell me, where was your entry?
Let me just look. My entry was 4209.
Exactly.
What was 0.97.
4209.97, yeah?
Yeah.
Okay. I know it's the wrong way around with the colors, but basically,
Yeah.
And what were you aiming for, TP?
TP would have been 42.03.
So you do 60 pips, right?
Yeah.
And a 30 pip stop loss?
Yes.
Perfect. Cool. Do you know what? There's absolutely nothing wrong with it. Nothing wrong with it. The only thing would have been maybe stop loss to break even. But otherwise, that trade there, you've got to take the shot. You have to. For me personally, everything was pointing to the downside. It still is. It still is for me until I see an engulfing back up to the upside. So I don't see absolutely anything wrong with it. Probably the only thing would be is if we could identify catching the sell at the high rather than catching it once it's broken the low, which is not the end of the world. But to be honest with you, it's not a bad trade at all. I think maybe, did you lose or did you get break even?
I lost because I was waiting for it to move to 40 pips. Then I would have moved my stop loss.
Okay, which is what you mentioned to James, yeah?
Correct.
See, that's not a problem at all. But if you think about it, if you're aiming for 60, you're waiting for it to move over 50% of the move already to move stop loss to break even, right? Yeah. And if you take a look at most candles when they're rejecting, you know, go and back test in terms of when you're looking for certain moves, how big the rejections are. And if you see this move like this, 1 candle, 2 candle, 3 1-minute candles, I said, fast move down normally means fast move back up. Yeah. Which then means you can protect your capital maybe faster. Totally up to you, but I'm just giving you ideas.
No, I'll take that on board.
Yeah. Because you'd rather be at break even than be at a loss, because when you're at a loss for the day, you're actually very good at this. You're emotionless. So you do get that urge because you mentioned it yesterday in the chat, but you have the discipline not to go and trade again. Most people will go and trade again to make the money back. But if you're at break even, there's nothing you need to do to make back. Cool. Any other questions? Otherwise, price is not really moving, so there's not much here for us. If you caught the sell, great. If not, no problem. You know what to wait for now. So essentially, once we break this low 4207.1, depending on if that's going to be London low, because it may take out a swipe to the bottom and then go back. Wait for this break to the upside if you're looking for buys, if that's where your bias is. So essentially, you're seeing a low. You're seeing I'll call this the high, and then you've got the low. So you really want to see this now break that area to continue up. Otherwise, we break this low, we're going to continue down. Other than that, that's it. No, nothing else, guys? Cool. All right, sending love. I will see you on the live call tomorrow morning. And if I see any other trade ideas, I'll post them in the members chat.